my voice is clearly audible to all of you?
Yes.
Yeah, thank you, Rai. Yatisha. So today is 6th February. Let's start Bazaar pe Charcha. But before starting, disclaimer that I'm going to read for you. Registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. And then our company name, registration number with SEBI, office address, compliance and grievance details. Officer details are given. So let's directly jump on new slide. Next slide. So this is the tabular presentation of the overall market performance over a different time period, like 1 week, 1 month, 3 months, 6 months, 12 months, like, and along with market direction. So here you can see last 1 week return. So in last 1 week, almost all the sectoral indices, including benchmark index, has generated positive return. While in last 1 month, majority of the indices generated negative return, except financial services and banking and financial services. That's it. And in last 3 months also, all the sectoral indices except IT generated negative return. In 6 months also, you see only 2-3 sectors like IT, pharma, and financial services, except that generated negative return. So I mean to say that on the basis of this table, one thing is clear that from the last 5-6 months, this overall market, Indian market, including benchmark index, Nifty 50 and Sensex, are tending into volatile manner and generated, I can say, negative return, except for sectors like IT and financial services. So let's move on chart to discuss technically here. So this is the current placement of market. If you see, this market is trending in negative trajectory below 200 EMA or DMA. This black color line is 200 DMA, and this orange color line is 50 DMA. And from the last few days, I can say from the last couple of days, it is facing resistance around this 50 DMA. Further, one more observation is here on the chart that this particular trend line, so this 50 DMA as well as this downward sloping trend line that I have just drawn in front of you is a key level to watch, because the day it will decisively cross this level and remain trading about 200 DMA, that is that is placed around 24,000 roughly. So maybe and another thing is that this pivot, this recent pivot, that is placed around 24,200. So here I can say three things. One is this crossing above 50 DMA, simultaneously crossing above this downward sloping trend line, and then followed by crossing about 200 DMA, that is 24,000, and then immediate pivot level, that is 24,200. So the day it will cross this 24,200 decisively and remain traded above this level, so we can say this maybe sustainable bullish trend will start in the market. That is the later on trend. But immediate trend, I can say this 50 DMA as well as this downward sloping trend line. If it will cross or Nifty will cross this particular level in coming days, which is currently placed around, I think, 23,700, 23,800 zone roughly. So the day it will cross, we can say that a market may attract some more positivity, and then followed by crossing 24,000, 24,200. Maybe more positivity will be there on the chart, or in coming days or in coming weeks in Nifty 50 index. Overall placement is not that much bad, I can say. Even couple of days back only, I think on today's Thursday, so on Tuesday only, we have upgraded the market trend from this rally attempt to confirmed uptrend, because on Tuesday we had a follow through day. That the market had follow through day is a day you may be aware that a day where index gained more than 1.7% along with higher volume compared to previous day, and that was happened on Tuesday. So that is why we have upgraded the market status from the uh, this uptrend under this rally attempt to confirmed uptrend. So as per O'Neill methodology of market direction, also this market is in confirmed uptrend. But technically, we are still waiting for this giving breakout above, first above this downward sloping trend line, then 50 DMA, 200 DMA, and then finally 24,200. So early sign, we are getting early sign that maybe positivity is are returning in the market, but we still need few another couple of points of that we are expecting that maybe in coming days or maybe tomorrow or in coming week, that index will show resilience in current market, and it will move toward upward direction. But yes, just keep watching the level of this 23,800 to 24,200 kind of zone. Maybe in our opinion, the moment, the day it will cross decisively 24,200 with higher volume, and it will remain traded above that. So maybe it will attract, or market will, our Indian market will attract more positivity. So this is the from technical perspective. Now, if you talk about macro perspective or fundamental perspective, so two major things are happening. Like one is that earnings season is already there. I think only few Nifty 50 companies are due to report its earning. Otherwise, majority of the Nifty 50 companies has already presented its Q3 earnings. Another is that is not bad, not that much bad earning session, Q3 earning quarter. And another is that tomorrow is the RBI policy is due. Last time this FOMC have not reduced any interest rate, but at the same time European central banks and other few Asian countries have reduced their interest rate, while we are, or our market is expecting that maybe RBI governor tomorrow or MPC, Monetary Policy Committee, they will reduce the interest rate by 25 basis point. But I think, in my opinion, I am expecting most probably RBI governor will not reduce any interest rate, or maybe, and it may keep status quo action, like it will remain as it is. Because what I'm expecting that if we talk about inflation side, so inflation as it is, there is no major change. First thing. Another thing is that now it is a February, maybe next couple of months, this summer will start. So maybe inflation prices will increase. And third most important thing, that in this time in budget, this finance minister has given hefty tax benefits to all taxpayers, and majority of the small taxpayers, people like you, me, are going to benefit from that new tax regime or new tax structure. So we all will have some extra money to spend, and that will push the demand. So again, it may elevate inflation further in coming few months. Obviously, it is not going to happen in short duration, but yes, in next few months it may happen. So I'm not expecting this RBI governor or MPC will reduce interest rate. So these are my logic. But yes, ultimately all these are expectation. It's purely depends on MPC committee expectation and their behavior. But this is our opinion that we are expecting this kind of thing. But if any reduction will happen at the same time, so not more than 25 basis point, that is for sure more than 99.9%. So most probably, in our opinion, there will not be any reduction in interest rate in tomorrow's MPC. But suppose any reduction will happen in interest rate, so not more than 25 basis points. So maximum 15 to 25 basis point reduction may happen, but probably it will not, in our opinion. Apart from Nifty 50, let's discuss about other index like benchmark major index, that is Bank Nifty. So if you see Bank Nifty, so Bank Nifty also we have moved this market status to confirmed uptrend because it has also recorded a follow through day, but it is still trending below this black color line, that is 50 DMA. First thing is 200 DMA, and then if you see here, this 50 DMA and 200 DMA is converging to each other. So this time that is placed around roughly in the range of 50,800 to 51,000. So I can say from now onward, 51,000 is a key level to watch. 50,800 to 51,000. The day Bank Nifty will cross and hold about that, so maybe more positivity will be there. And further, I think few banks, especially mid-sized banks, are gaining its momentum technically. So, in our opinion, maybe this ongoing trend will remain continuation in coming days. So just keep watching, crossing and holding above 51,000, maybe more positivity will be there. Immediate support point of view, if you talk about immediate support point of view, so that budget day low, or I can say in the range of 49,000 roughly, is the key immediate support. But before that, first immediate support is placed around 49,500 and then followed by 49,000 kind of zone. So that is the immediate support. But most probably the way this placement is happening in this Nifty 50, and it remained underperforming sector from the past almost 1 year, I can say, comparatively. If you see in the last 1 year, let me draw a trend line. 1 second. Yes. So if you see this 1 year performance in this, so there is no major change happened. But see, overall trend was positive. But yes, there is no major change happen. And after this type of sideways trend, this time there is a decisive correction and lower band, and it is now moving from the lower band. So maybe possibilities are quite high that this time, after long period of time, Bank Nifty may outperform Nifty 50. And if any positivity will return in the market, so that will be led by the Bank Nifty in coming days or coming weeks. Level wise, 51,000 in upside, crossing above that, more positivity will be there. Support wise, in downside, 49,500 follows by 49,000, immediate support is placed. Now, apart from this Bank Nifty, let's move on other sector, major sector, that is FMCG index, Nifty FMCG. So Nifty FMCG clearly, if you see here, there was how huge correction happened in this Nifty FMCG index, technically from the level of this approximately 66,000. And now it is come from the last couple of months, or I can say from November onward. So November, December, January, so from the past 3 months almost, it is comfortably trending below this black color line, that is 200 DMA. First thing, another is that facing resistance around 200 DMA, multiple resistance. See, one resistance is here, then second resistance, and then third resistance again we are facing. So clearly we can say in FMCG index, unless and until it is not crossing 200 DMA, maybe it will remain traded lackluster. If you see on the budget day, there was a lot of declaration happened related to this tax and all, and because of that there was some sentiment built up and happened that there was a buying interest emerged in this all these consumption stocks, but including this FMCG. But again, it is still facing resistance around 200 DMA. So we can say that now decisively crossing and holding above this 200 DMA, then only emerge the buying interest or fresh buying interest or fresh bullish trend in this particular index. So just keep watching this 200 DMA, which is currently placed around roughly uh, 58,800, or maybe roughly we can say 51,000. So 51,800 or 51,000 is a level to watch. If it will cross decisively with good volume in coming days, so maybe it will attract for more positivity. Maybe tomorrow, if interest rate cut will happen 25 basis point, then also we can see sharp shoot up in this index as well, including all interest rate sensitive stocks. But FMCG may also suit up. So let's see how things will improve tomorrow from the RBI front. So I have discussed this Nifty 50 bank and FMCG. Now my colleague Atisa is here. He will discuss few sectors with you.
Okay, thank you, Pawan. So let me share my screen. Okay. So let's discuss pharma sector first. So today, from last, if you see from last almost since August, since sorry, since October, the index has been after it's made a high. The index is trading in the sideways range, and eventually, for a brief moment in the Jan end, it breached its 200 DMA, the long-term moving average, as well as multiple support lines. It breached the 200 DMA. However, it after that it made a quick comeback. Even eventually from last 3 days, especially on February 4th, the index has been given us from a downward sloping trend line. However, the still the it's maintaining that lower high, lower low price structure. So even today also, if you see closely, it came towards its 50 DMA, and there was a profit booking happened in especially in the second half. So the index closed on the slightly on the negative side. Not on the negative side, it's closed positive, but majority of the profit has been booked in the higher side. So also, momentum has been improved and MACD is also positive. So right now on the price structure, the 50 DMA is a key level to watch, followed by 200 DMA. Also, once it crosses and holds above 50 DMA, then it comes confirms the trend change, higher high, higher lows price structure will form. And if it doesn't close and holds above its 50 DMA, then once again we might see this price structure range of last couple of weeks that will be continued in Nifty Pharma. So let's see what happens next. So key level to watch on the upside is 50 DMA followed by 100 DMA in the next coming days. So the next index is Nifty Metal. So Nifty Metal, after that key break below its key support areas, especially in 8,000, 8,500, 8,600 levels. So there was a huge breakdown there, and it was happened in December. So after that, it's continuously making lower high, lower lows price structure from last almost October. So trend is negative. So from last couple of weeks, if you see from especially from January 1st, so it's making a base around this level. So right now, this the majority of the resistance area is around that the previous breakdown which has happened near that 8,700, 8,800 level. So that is also 50 DMA is also placed around that level. So that is a key level to watch. And also, if you draw a trend line on the downward sloping trend line on the closing basis. So that also it is almost near to that 8,800 8,900 level. So that is a key level to watch on the upside. And on the higher lower side, if it breaks below this low, which was there was a huge support around 8,000 level. So once it breaks below this 8,000, then we might see fresh downside window might open in the metals chart. So right now, the index is looking sideways trend. It might trade within this range of 8,000, 8,000 to 8,000, 9,000, 8,800 kind of level in the next coming days. And the next sector is Nifty Energy. So Nifty Energy is still trending in the lower high, lower price structure, and also, if you observe this blue line, which is 21 DMA, so consecutively from since October when when it fell from this channel pattern, so consecutively it is facing some resistance around its 21 DMA. So even today, it has a couple of times it tried to close and hold above its 21 DMA, but once again it failed. So once it crosses and holds above its 50 DMA, and if it makes a base around this area, so around that 32,000 to 32,000 to 35,000 level. So once it makes a base around this area, then we might see once it breaks and holds above this 35,000 level, then we might see some upside towards 36,000 or 37,000 kind of level. But looking at the momentum and momentum chart, the index likely to trend within this range. So if it closes below this 31,000, then we might see fresh downside window might open in Nifty Energy. So trend is sideways within this particular range. Range might continue. So let's see how it goes. Next one is Nifty Auto. So Nifty Auto also it's making lower high, lower low price structure, and if you see from last almost November, so November it's making a broadening, it's making a broadening channel. So it's currently trading within this broadening channel, and today from last, especially after budget. The index has been tried to make that try to break above that level, but could not manage. So it's continued to trade within this particular range. So tomorrow, RBI's policy is a key for this particular index also. So interest, if any rate cut in this RBI policy, so if it breaks above this trend line as well as 100 DMA, then we might see some more upside towards 25,000 we might see in the coming days. But if it fails to hold that breakout level, then we might see continue to trade within this particular range in the coming days. So I think we have covered four or six sectors, and two more remaining sectors are there. So I think.
Okay, Yatisha. So can you share this Nifty IT
Yeah.
chart and then followed by real Nifty Realty? So first let's discuss Nifty IT. So if you see Nifty IT correction started in the mid of December and then it has reached 50 DMA, 100 DMA. Currently from the past few weeks, it is comfortably hovering around 100 DMA and uh, uh, I can say it is a one kind of no trading zone in Nifty IT index. Further, if you draw a trend line, this downward sloping trend line, uh, Nifty IT index on daily chart. So we can see that this IT index here is about to give breakout above this downward sloping trend line. So let's see how things will improve in coming days in this IT index. Most probably this level of approximately 43,500 to 43,700 is a level to watch, key level to watch. So current rate is 43,000. So almost 500 to 700 points away from current level in upward direction. So 43,500, 43,700 is a range to watch in coming days. Suppose it will cross and hold above that range, so maybe more positivity will be there. And in such case, maybe index will be ready to move toward at least 45,000 in next couple of weeks. So just keep watching, but suppose it will not cross and hold that 43,500, 700. So maybe most probably it will remain traded in sideways or lackluster like it is trending from the last uh, almost 3 weeks. So net to net, positivities are returning, but let's see, we need confirmation. So confirmation will happen most probably about 43,500, 700. It will cross, then 45,000. Otherwise, it will remain traded like it is trending from the past 3 weeks in the sideways zone, and that sideways zone is same again, 43,500 to 42,000 kind of zone. Now, Nifty Realty. Nifty Realty. So Nifty Realty overall trend is negative, comfortably trending below all the key moving averages first, forming lot of lower bottom formation. It has lost substantial momentum not only on daily chart but on weekly chart as well. Even if analyzing monthly chart as well as showing some negativity. So negativities are there, no doubt. Maybe immediate support, if I talk about strong support, obviously splashed around 800 level. So current level is 900, I think 15, 17 range from 800. So possibilities are there that the index may fail from current level. But again, tomorrow is RBI policy. If any reduction in interest rate will happen from MPC side. So this a realty index is a highly rate sensitive sector and stock. So maybe this whatever negativity will we can see at current point of time, that will automatically convert into positive side. So obviously any fundamental changes or macro changes is macro changes always change the market direction or sector direction, index direction, stock direction, even though technicals are showing negative like that way. So just keep watching tomorrow's action. But suppose that tomorrow's action, if there will not be rot cat, then I'm expecting level of 800 maybe in next couple of weeks or couple of months in this index. Now, so we have discussed almost all major sectoral indices. So let's move on query section. Please open the chat box so people can start asking queries. Okay, so first question is BSC, Bombay Stock Exchange. Let's take Yatisa BSC.
Yeah.
So BSC overall trend is positive, no doubt, and it is one of the outstanding performing stock. It has shown outstanding performance in last 6 months as well, where market has generated negative return of Nifty 50. We talk about uh, more than 12-13% negative return, while other sectoral indices have generated more negative return. But this was the warrior kind of stock, we can say, in the last 6 months, generated substantial positive return. If you see from the September, there was this clear-cut breakout happened around 3,000, 2,900, 3,000, and from that there is a non-stop rally happened up to almost 6,000. After 6,000, it is trading some profit booking or resistance and hovering into sideways zone. But overall trend sentiment is still positive. Only concern is that it is losing its momentum on daily chart. So there is a price momentum divergence are happening on the daily chart. But at the same time on weekly chart, no major price momentum divergence are happening. But yes, on weekly chart, one more concern is that MACD, weekly MACD indicator, moving average convergence and divergence, is showing some negative crossover. So that is the point of concern. So let's see how things will improve in coming days. Overall sentiment is positive. 50 DA, it is still holding 50 DMA. That is currently placed around 54,000, 5,400, 5,400 zone. So that is why we can say 5,400 or 5,400 is immediate key support area or immediate key level to watch. Apart from that, upward sloping trend line that we can draw from the November low. So that is also it placed in that range. So that is why we can say that is the level to watch, 5,400 or 50 DMA. Suppose it will breach that, then maybe more negativity. It will attract more negativity. Further, if someone will ask my opinion regarding this stock, So the stock, this particular stock has moved substantially in the past 6 months. So maybe not in that major correction or kind of thing, but yes, some sideways move may happen in next couple of weeks or couple of months. I'm not denying for that. So maybe we can say, in another word, we can say some, we cannot deny for some more profit booking at higher level in this particular stock. But yes, from the long term perspective, trend is positive, not at all, but the short to mid term perspective, this particular stock may remain traded is sideways kind of zone with little bit elevated volatility.
Next one is Nike.
Nika.
Yeah, Nike fashion.
So Nika, last week we have added in our TraderSmith portfolio, but after addition, the stock failed to hold about 200-day moving average, which is currently placed around 180, 181. And from the past couple of days, it is showing negativity. So from short-term perspective, we can keep watching market, that's TraderSmith action. From the long-term perspective, you can keep watching level of 162 rupees. I can say 62 to 63 rupees. Unless and until it is holding 162 rupees from the long-term perspective, as such, there is no major problem. But the day it will breach 162, maybe it will attract more negativity. Further in the upside, it is facing resistance around 180, 181. It must cross and hold from now onward. It must cross and hold 180, 181 level to gain or regain toward maybe 200 or maybe toward 220 kind of zone. So just keep watching level of that. Otherwise, you can follow our TraderSmith for short-term perspective.
Shall we take a few queries?
Yeah,
Okay.
please.
Next one is scans. So CAMS is trending lower, and if you see from a longer time frame picture, it's when it breaks below this 50 DMA as well as 100 DMA, the negativity has been started. And also, if you draw down upward sloping trend line, that is also plays around that level. So once it breaks below that key support keys level, so index the stock is now trending in a lower high price structure. So those are if you are holding from the longer time frame perspective. So this is a level where the idle sell should have been happened. So right now it's better to sell if you are holding the maximum profit. Then it's better to sell and better to wait for another when the stock resets. It will make another base. Then we can see a fresh upside breakout may happen, then we can re-enter it. But looking at the chart, it's looking weaker. And also, if you see the volume is the negative volume is rising, so better to keep an watch on this particular area as well. The next one is Aarti Pharma. So the pharma today it has made an attempt to break out from the consolidation base, and but however the close which has not happened above this level. So it's better to wait and watch. If it manages to holds above this 720 level, then it's a very good sign. But if it once again if it comes back towards this price structure range, and better to wait and watch in this particular scenario. So today the volume was nice, and however because of overall market sentiment, might have been came down. So if already bought someone in this particular price range, then better to wait and watch. This ideal stop loss for this particular stock will be the swing low. So it's bit deep. So that is a level which is a 550 kind of level. So that is a level to watch on the downside. Next one is Inox Wind. So Inox Wind, it's once again it's making lower high, lower low price structure. And if you observe clearly, 50 DMA is a key level. It's consecutively it's facing that resistance around that level. So once it crosses and holds above this 50 DMA, then we might see a downward sloping trend line also. So better to wait for that level. Once it breaks out and sustains that level, then it's a very good buy. But right now one can avoid and one can keep it in a watch list for the buy in this particular stock. Next one is SBI. So SBI, I think today they have reported the earnings, and after that, post earnings, there was a huge volatility, and today it closed on the negative side. So it's made a base in this particular price cluster, and the key level to watch on the upside is this 785, 790 kind of level. So once it crosses and holds above this level, then we might see next leg of resistance around its 200 DMA. So that is the level for SBI. And on the downside, the 720 is a key support area. So once it closes and holds below this level, then we might see fresh downside window might open. Next one is TD Power. So TD Power, it has given a sell signal. First sell signal was in near this 50 DMA breakdown, and the next one is around this price cluster range. That is also 200 DMA as well as this swing low. So once it breaks below this level, it has given a sell signal. Right now, it is facing to it has made a bottom, and it tried to reclaim that this point of polarity, but it's today also it faced some resistance at a higher level. So once it crosses and holds above this 200 DMA, then 200 DMA as well as this price cluster, then we might see stock is likely to trend in this particular price range in the coming days. But looking at the momentum and the volume behavior, so stock is likely to trend within this price cluster for the coming weeks. Next one is Inox Wind. I think Inox Wind I have covered it. So I think JWL and Titagra. So pre-budget rally, all the railway stocks have been tried to pick up from the lower level, but however, the budget session is not so good, and where there is no major improvement in the capex. So all the railway stocks has been on the lower side. So this stock also it's making lower high price structure, and the base which was somewhere around 420. There was a base, very good base, and there was an attempt to bounce from that base also. So right now it's making lower high, lower lows, and better to avoid this particular stock as of now. So once again, if it makes a one more base and breaks out from that level, then we can see. But as of now, one can avoid. And Titagra, here also, it's making lower high, lower low price structure, and also it made a base break below base, and it's better to avoid this particular stock. Next one is UPL. So UPL, UPL, it has given a very good breakout from this particular price tight range pattern, as well as if you draw a trend line, so that comes around 550 kind of level. So just before the budget day, the stock has been given a breakout, and I think it was underperforming in the last almost, if you see the chart in the weekly chart, so it was almost underperforming in the last 2 3 years, and it has made a very good base and tried to made a one more pattern over here, consolidation range as well as tight range, and just before the budget day it has given a very good breakout, and currently it's holding above this breakout level also. So those are already holding from the breakout level or from the lower level, so continue to hold with the stop loss below this 200 DMA, and fresh entry can be avoided once it stocks comes back towards its 600 level. Then one can looking at the price structure, one can re-enter this particular stock.
Okay.
Okay.
So in between, one query is that what might be the good booster for the market to start the uptrend? So I think if we talk about domestic front, so now budget is over. RBI policy front, so rate cut is one booster. Maybe tomorrow or maybe next session or next this meeting. One thing. Another thing is that government spending that which is slow down in the last calendar year. So it should accelerate to boost liquidity or maybe market sentiment. And another, if we talk about uh, that out of India or out of domestic thing, means a foreign market. So obviously stability from the geopolitics, I can say, especially from now Trump is there and he is trying to make new news always like trade tariff and so many things. So on geopolitical is the one thing that is the thing that we have to consider. And then FII returning to market obviously is a key. No doubt that is not only exclusive thing, but yes, if I will start buying, so maybe market sentiment will boost, or we can say down the line they will return. But yes, these are the things. So, but the major is that domestic front, that is interest rate and government spending, and which will automatically convert into numbers and everything. And from global front, stability in global market and this geopolitical thing. So these are the booster for market. If any kind of stability will be there, so maybe that will automatically boost the market sentiment.
There is one more query.
Which stock? Yes. Which
There was
query?
one more query, general query. How can we interpret earnings stability score?
Hmm. So can you show him?
Okay, so basically, if I see whenever this particular sector which earning stability, so it all depends upon the last 6 quarters earnings. So it how the company has posted its earnings in terms of EPS as well as sales. So that rating will come automatically. Then we can see whichever the top, now it will show the 99. So the earnings are very good in terms of from last 4 to 6 quarters earnings. The stocks will continue with the Zomato. So if you see Zomato after that euphoric rally in the last year, so it's making a lower high, lower low price structure. And after the yesterday also there was a earnings from Swiggy, which was quite disappointing. And the stock now it's closed below its 200 DMA and currently facing that resistance around that area. As well as if you draw a point of polarity where this price cluster range, so that is a crucial resistance level for Zomato. So once it crosses and holds above this 200 DMA, then we might see this stock likely to trend this particular consolidation range in the coming weeks. So better to wait and watch. Once it stabilizes, the price action stabilizes, then we can see re-enter this particular stock. Next one is
One
transformers.
interesting, one interesting question, Yatisa, please.
Okay.
One person is asking, Yogesh is asking that when can we say it's a bear market? So it is quite interesting because first is that there is no clear-cut definition or clear-cut numbers for this bear market. It's purely depends on your attitude or your nature or your way of investing or your way of trading. But yes, there are few general accepted phenomena in the market that I would like to share. So first thing is that generally broadly or from the long-term perspective, people say that if market is fell more than 20% from the recent all-time high, so we can say that and it is trending below that. So maybe we can say that the bear market from long-term perspective. Another perspective is that if index is trending below all key moving averages, especially 100 DMA, 200 DMA, so then also it is one kind of bear market. Like currently from the last couple of months, it is trending below 200 DMA. So you can say that as per that criteria that we are in bear market. Still it is not crossing above that. So we can say we are in bear market. Another thing is that few say that this crossover, that death crossover, that 50 DMA and 200 DMA, where 50 DMA cuts 200 DMA from the upside and 50 DMA start moving toward below 200 DMA. So that is another sentiment that is the sign of a bear market. Apart from that, there are few fundamental reasons also, like earnings are not improving, price market is in consolidation zone, inflation is not in control. So all these signs are the bear market. So it's purely depends upon person to person, what kind of things or what is your perspective to look at the market. So this is the things that you can consider while considering any form of market, whether it is a bear market or bull market or bearish market. Okay, please Atisha continue.
Okay.
Thank you.
So next one is Zomato, I think. IndusInd Bank. So IndusInd Bank, after that last quarter earnings, the stock has been made a very good base around this particular price range. And there was a, if you draw a trend line within this range, there was a very good breakout and as well as a 50 DMA rating in IndusInd Bank. So those are already holding from this lower level, then continue to hold. The stock might witness some sort of resistance around this price gap range. So that is around 1150-70 level. So we stock might head towards that level. Then once again, the stock might made a base around this level. So those are now thinking to buy this stock. Better to wait and watch. So once this stabilizes, price cluster stabilizes, then only can enter it. Next one is Walchandar. So here also it's making a lower high, lower low price structure and 100 DMA here the key level to watch. And once it closes above this price range from a downward sloping trend line, so one can re-enter this particular stock. So until then, better to wait and watch in this particular stock. Next one is Symphony. So Symphony, all when the budget is announced on Feb 1st and this particular stock, it's all the white goods. It's made an attempt to break out from the lower level, but however, from last 3 days trading session, uh, the follow-up buying is not coming from none of the stocks. So once again, it moved towards this price cluster range. So any breakdown below this 1200, then we might see fresh downside window might open on the upside. So stock has to come back towards 1450 level. So once it sorry 1300 400 level. So once it crosses and holds that level, then we might see a fresh upside might open in Symphony. Next one is Sharda Crop, and today there was a huge jump, especially in all the chemical stocks in today's trading session. So here also the stock from the bottom where the price structure range, very good support range for this particular stock. So from that level, it has given a very good bounce. So one can look for this particular stock for a small swing trading kind of style. The close below this particular level can exit with the stop loss below this price structure range and continue to hold a particular stock. The stock might be heading towards this price range and also 50 DMA which is placed around this level. So sorry, not 50 DMA or 21 DMA. So which is placed around this level. That might be the ideal target for Sharda crop check. So until then, the stock might likely to trade within this particular range in the coming days. Next one is Voltas. Here also same thing, which is Symphony, and which is after that very good bounce from the lower level. Once again, stock is moving towards sideways range. So better to avoid this particular stock as of now. Look for other stocks, and trend is negative. Action construction equipment, same thing. Continue to trade within this price cluster range. The stock likely to continue to trade within this price cluster range. So anything breaks about this 1560, 600, then we might see take an action. But until then, stock likely to trade within this particular range. Next one is Deep Industries. So stock made an break once it breaks below this 100 DMA, but however once again came back, and the volume is also from today's trading session. It was fair volume has been placed, but however closed just below this breakout level. So better to wait for another couple of sessions. So once it crosses and holds above this downward sloping trend line, then we might see fresh upside window likely to open. So key resistance over here is previous low, previous high. So that's once again the resist likely to act as a resistance for this particular stock. So one can keep monitor this stock in the coming days for the further upside. Next one is Capacit. So here also the long-term moving average 200 DMA, it's a major support level for this particular stock. So once again, it touched its 200 DMA and then very good bounce back in today's session. And the stock likely to trade within this particular range of 200 DMA and 50 DMA in the coming days. So any those who are interested in small swing trading, then one can look for this stop loss below 330. So one can enter this particular stock with a first target of 50 DMA and followed by this previous high in this particular stock. Next one is New India Assurance. So trend is negative, making lower high, lower low, and also it's made here rounded top price cluster. So trend is negative, and also volume is diminishing. So better to avoid this particular stock once it gives a very good breakout from makes a base and gives a breakout, then one can re-enter this. Next one is PNB Guilds. So technical side, it's making lower high, lower low price structure from last to 1 month, especially from January, December last. So it has made a base around this 95, 95, 94 level. So from the very base, it has made a trading sideways range. So until it's trading above this level, the stock likely to trend within this particular range of 94 to 110 kind of level. So better to wait and watch in this particular stock.
Okay, so one more question is that what is the VIX and how to consider in stock holding? So see, what is the meaning of VIX? VIX means volatility index, and it was designed to measure the volatility in the market, and it is still used to measure the volatility in the market, especially in derivative market. Okay, so measure the volatility in derivative segment, and then it was emerged as an indicator, volatility indicator. And whenever any any major things is due in market, so volatility increases generally. Like before budget, if you see, observe, one simply observing this volatility. So before budget till 29th, or I can say that volatility was increasing. After budget or from the day of budget, I can say it started cooling down. Like whenever there is an election happened or any major earnings due, or any political instability or political things are happening like election, union election or central government election or anything like that. So whenever any major changes are in pipeline in market, in economy, on geopolitical space, be it globally or domestically, volatility increases. And to measure that volatility, this particular index is designed to gauge that how volatility is increasing. Generally, there is an inverse relationship. Generally, I'm not saying 100%. Generally, there is an inverse relationship between among this volatility index, VIX, and market direction. So general perception is that when volatility increases or when market goes down, so volatility increases. When market goes up, so this volatility it is in decreasing mode or maybe remains sideways. So this is the general observation. But yes, it is mainly related to events, any major events I can say. Now, how it is useful in stock holding? So I can say if you are a long-term positional trader or long-term positional investor, trading in cash market, buying deliveries, buying stock as in demat account and then selling whenever it is increased. So I can say it has very negligible or zero to negligible impact on your stock trading or stock holding over a period of time. Time being, it may happen. I'm not denying for that, but over a period of time. But at the same time, if you are a derivative trader, if you are trading in derivative, if you are trading or playing lot of call put, future position and everything, so maybe it may impact. So I don't know what kind of person you are, the person who has asked the question, but these are the impact and these are the implications of this India VIX or volatility index. So there are so many. For India, it is called as India VIX. In US market, that's S&P VIX. So they measure the S&P 5. They design this volatility on the basis of S&P 500 index. Other part of like European market also have their own volatility index. Japanese market have their own volatility index. So these are the things, general information about volatility index. So let's take few last questions, 4 5 questions, and then we will wrap up the session.
Okay, so first one is associated beverage, alcohol and beverages. So if you see the stock is trending upwards despite the overall weakness in the broader market. So the earlier breakout which was happened over here in the month of November. So after that November breakout, the stock has been trending sideways, and from last post budget, the stock is trending upside without any showing any signs of weakness. So those are already bought from the lower level, continue to hold, and but for the fresh entry can be avoided, uh, and the stop loss can be kept below this price cluster range as well as 50 DMA on the downside. Next one is Sequent. Sequent Scientific, it's trading in the lower high price structure. And if you see, the 200 DMA is currently acting as a key support level for this particular range. And also, if you see, prior, there was a breakout which was happened here on this particular price range. So that is a key level to watch. So once it crosses and closes below this level, then we might see a fresh downside window. On the upside, better to wait and watch. If you see the volume is being dried up, better to wait and watch. Better to wait for some more time in this particular stock. Next one is Sarkoft. So better to avoid. It's trading in lower high, lower low price structure, and the price structure of this particular range of 180 kind of level, that is a key support area for this particular stock. So better to avoid as of now. Union Bank, it's I think today it's made an attempt to break out, but yeah, it's tried to attempt a breakout from downward sloping trend line. So that huge trend line from last 6 7 months breakout, so likely to face a resistance around this level. So any tomorrow is a key policy meeting likely to happen. So any breakout above this level, then we might see a fresh upside window towards 140 in the coming days. But anything happens, any profit booking happens. So the key support range is 109. Sorry, key range is 107. So that is a key level to watch on the downside. So KRN, its disclaimer model, MarketSmith India model portfolio has been added. Once it breaks out, there was a huge gap up and there is a huge breakout, which is from the consolidation range. So after that, today also stock is up around 9%. So better to wait. The stock is almost from the pivot level, it's almost 10%. So better to wait. If the stock comes back towards this price range of 900, then one can re-enter this particular stock. But right now, it's better to avoid on the stocks likely to continue its uptrend. But at current juncture, your risk reward ratio won't be favorable. So better to wait and watch towards the ideal buy range of 900 level. Deepak Fertilizer. So Deepak Fertilizer, its consolidation base is happening. So key level to watch over here is 1200. So once it closes and holds that 1200 as well as 50 DMA, then we might see this particular stock on the upside. But right now, stock is still trading this price range. So downside, this consolidation range low is a key level to watch. IRCTC. So once again, railway stocks are trading. There was a huge rally on after budget day, before budget day. So after post budget, the stock has been once again moved back towards this price cluster range. So once again in the sideways range. So better to avoid as of now. So there is no any fresh entry can be seen in railway stocks as of now. Kalyan Jewelers. So there was a sharp fall on the higher volume as well. And the stock is eventually breached 200 DMA. And currently it's from last couple of days, prior days, it's faced the resistance around 200 DMA. So once again, today is also down with higher volume. So it's, I think the stock trend might have been changed. So better to avoid as of now. Those are already holding from the long from the low, this particular price breakout level, then one can exit. This is a better opportunity still if those are holding, and better to avoid as of now. Next one is Ashoka Buildcon. So the stock, they made an attempt to break out from the flat consolidation range, but due to overall market weakness, the once again stock moved towards 200 DM. However, the volume is on the lower side, so one can continue to keep an watch list on this particular stocks. The stock once again makes a base, then if it breaks out from the any price pattern, one can re-enter. And also one can see after 10th there is a earnings due as well. So we'll see a clear picture after 10th. Then one can wait for this particular event in this particular stock. I think we have covered majority of the stocks. I think,
Yes.
shall we wrap up?
So we have covered, I think so. Let's wrap up the session here only. If someone's query is unanswered, so please write an email to us. We will definitely reply, or we will try to cover your query in next Bazaar Pe Charcha on priority basis. So thanks again from myself, from my side, and Atisa and entire TraderSmith team for joining the session. Just stay tuned with us to know more information about market in next Bazaar Pe Charcha. Thank you. Have a great day. Enjoy your trading days in coming days. Thank you.
Thank you, everyone.
मिलते हैं ना 5 मिनट